Would you pay a little today to protect everything tomorrow? That's what insurance is all about. But how does it actually work? What types of insurance do you really need? And how can it save or cost you money in the long run? Stick with me because today, we're breaking down insurance like never before. Welcome to Channel Name, your place for simplified knowledge that saves you money and helps you grow smarter financially. In this video, we're going deep into the world of insurance, from health to life to car and even travel insurance. Grab a notebook because by the end of this video, you'll know exactly what kind of coverage you need. Let's start with the basics. Definition: insurance is a contract between you and a company where you pay a small fee, called a premium, and in return, they protect you from big financial losses. Key terms: premium, siyun, kside, what you pay, deductible, siyun, what you pay before insurance kicks in, claim chance, what you file when you need money back. Example: imagine your car crashes. You'd pay $500 deductible and insurance would cover the rest, maybe thousands. Here's a simple breakdown of how insurance companies work. Risk pooling: everyone pays into a pool. Probability: insurance companies use math, called actuarial science, to predict risk. Underwriting: the process that determines how much premium you pay. Real-life analogy: think of it like a group of friends putting money into a jar each month to help whoever gets into trouble. Covers medical expenses, includes hospitalization, doctor visits, medicines, HMO versus PPO versus EPO. Explained term life versus whole life. Who needs it and when, how it protects your family. Liability, collision, comprehensive. How rates are calculated, tips to reduce premiums. What's covered: natural disasters, add-ons like flood insurance, cover trip cancellations, lost baggage, emergencies. Essential for international travel. Liability, cyber, product insurance. Why small businesses need protection. Not all insurance is created equal, so how do you decide what to get? Needs versus wants: age and stage of life. Financial dependence. Practical tip: if losing an asset would ruin you financially, insure it. Choosing insurance can be overwhelming. Here's a checklist. Compare plans. Use comparison websites. Read the fine print. Understand exclusions. Check the claim process. Customer reviews. Financial strength of the insurer. Even smart people fall into insurance traps. Under-insuring, over-insuring. Not disclosing medical history, not updating policies regularly. Example: a man forgot to update his life insurance after divorce. Guess who got the payout? Insurance isn't just a monthly bill. It's a financial shield. The more you understand it, the smarter your decisions will be. If this video helped you, please hit the like button, subscribe, and share it with someone who needs to hear this. Comment below what insurance you have or plan to get, and I'll personally reply with tips. Want to pay less and still get covered? Try this. Bundle insurance policies, increase deductibles, maintain a good credit score, avoid unnecessary add-ons. Insurance is more than just a policy. It's a world filled with complex characters, legal jargon, and real-life heroes and villains. From the underwriter to the claimant, from the broker to the adjuster. The insurance world is like a drama, with each character playing a crucial role in deciding your financial fate. But who are these insurance characters, and how do they affect you? Stick with us for the next 30 minutes as we dive deep into the world of insurance characters, their roles, responsibilities, and real-world relevance. You'll never see your policy the same way again. Insurance characters are the individuals or entities involved in the creation, administration, and execution of an insurance policy or claim. They can be people, companies, or roles defined by function. Imagine insurance as a movie. You're the main actor, but there are directors, producers, scriptwriters, and even villains. These are your insurance characters. Policyholder. That's you. Insurer, the company providing coverage. Underwriter, the risk assessor. Insurance broker agent, the middleman or advisor. Adjuster, the claim evaluator. Beneficiary, the one who gets the benefit. Regulator, the watchdog. Reinsurer, the backup insurer. Actuary, the mathematician of risk. The policyholder is the person who buys the policy. You have rights, responsibilities, and the most to gain or lose. Pay premiums on time. Be truthful during the application. Notify the insurer about changes. Transparency claim settlement. Policy portability. Read your policy document. Know your coverages, exclusions, and terms. The insurer is the one who provides you the cover. It could be LIC, AIG, Allianz, or a government insurer. They decide what's covered, how much, and at what cost. Collect data, create plans, predict losses, build financial security nets, claims underwriting, customer service, legal product development. Underwriters are like the gatekeepers of insurance. They assess risk and decide whether to approve your policy and at what premium. Evaluating your health, driving history, or property details. Calculating risk scores. Deciding the terms of coverage. If you smoke, your life insurance premium could be 40% higher. The underwriter decides that. Insurance brokers and agents are the bridge between you and the insurer. They help you choose the right policy and explain all the legal terms. Agents represent the insurance company. Brokers represent you. Ask questions about your needs. Suggest suitable policies. Explain fine print. Sell for commission, not for protection. When disaster strikes, the claims adjuster enters the scene. They investigate, assess damages, and decide how much the insurance company will pay. Verify the claim. Inspect the site, interview witnesses, review documentation, submit a report. Don't exaggerate claims. Adjusters are trained to spot fraud. A beneficiary is someone who receives money when the policyholder passes away or when a payout is made. Primary gets money first. Contingent gets it if primary is unavailable. Always update your nominee or beneficiary if there's a life change like marriage or divorce. Every insurance company and professional must follow rules laid down by regulators. Examples: IRDAI in India, NAIC in the USA, FCA in the UK. Why regulators matter. Ensure fair practices. Protect customer data. Control premium rates. Approve insurance products. Ever wonder who insures the insurer? That's where the reinsurer comes in. One insurance company buys insurance from another to protect itself from massive losses. In a natural disaster, a reinsurer prevents one company from going bankrupt by sharing the burden. Actuaries are like number wizards who calculate how likely it is that something bad will happen and how much it'll cost. They use math, statistics, economics, financial theory, their work. Impacts: premium pricing, reserve setting, company profitability. Checks property, vehicles. Third-party administrators, TPAs, handle health claims. Ombudsman helps resolve disputes. Know who to contact. Don't just rely on customer care numbers. Ask for the actual character involved. Let's understand all of this with one simple story. Meet Raj, a 35-year-old man who buys health insurance. He talks to a broker. The underwriter evaluates his profile. He gets a policy from an insurer. He designates his wife as a beneficiary. He pays his premiums regularly. A TPA processes the documents. An adjuster visits the hospital. The insurer pays 90% of the bill. Regulators ensure the claim was fair. The actuary recalculates premium pricing next year. This is how every insurance story unfolds, with multiple characters, each crucial to the ending. Understanding these characters helps you make informed decisions, avoid fraud, and get the best out of your policy. Final tips: know your agent. Understand your policy. Always disclose the truth. Keep documents safe. Know the escalation ladder. Insurance is a contract between you and a company, the insurer, where you pay money, called a premium, and in return, the company promises to pay you back in case a specific bad event happens. A car accident, a medical emergency, a house fire, or even your death in case of life insurance. Think of insurance as a financial safety net. You may never need it, but when you do, it can save you thousands or even millions. Premium, the amount you pay to the insurance company regularly. Policy, the actual contract or document stating terms and conditions. Claim, a request you make when an incident happens. Deductible, the amount you pay from your pocket before insurance kicks in. Coverage limit, the maximum amount the insurance company will pay. Understanding these terms helps you read between the lines of any policy. Let's talk about the most common types of insurance. Pays for your hospital bills, doctor visits, and medical emergencies. Critical for families, often provided by employers. Pays a lump sum to your loved ones if you die. Term life is cheaper, and for a fixed time, whole life lasts your entire lifetime. Covers your car, damages theft and accidents. Mandatory in most countries. Comes with third-party or comprehensive options. Homeowners insurance. Protects your house and property from fire, theft, natural disasters. Often required if you take a home loan. Travel insurance useful when traveling internationally. Covers lost luggage, flight cancellations, or medical emergencies. Business insurance. If you own a business, this protects against lawsuits, theft, or property damage. Now let's break it down. How does the system work? Imagine 1,000 people buying car insurance. Each pays $1,000 annually equals $1 million collected. Now suppose 100 people out of them file claims, and the average claim is $7,000. So the company pays $700,000 in claims, keeps $300,000 for operations, marketing, and profit. That's how risk pooling works. Those who don't claim help support those who do. It's not unfair. It's how risk is shared across society. Insurance companies hire underwriters to decide whether you're eligible for a policy. They analyze your age, health, occupation, driving history, medical records. Actuaries are the math geniuses who use statistics to calculate how likely something is to happen. They help determine your premium amount, your risk category, your payout value. Pros: financial security, peace of mind, tax benefits in some cases, mandatory in many life areas. Cons: can be expensive if unused, complex fine print, denied claims due to technicalities. Always read the exclusions before buying. That's where many people go wrong. Did you learn something new today? Do you feel more in control of your insurance journey? Myth 1. I'm young and healthy. I don't need insurance. Truth. Accidents don't ask your age. Myth 2. All policies are the same. Truth. Coverage varies widely. Never assume. Myth 3. Insurance companies never pay. Truth. Most valid claims are paid. Only dishonest or incomplete ones are rejected. Assess your risk. What do you need protection for? Compare plans. Use tools like Policy Bazaar, NerdWallet, or Insure.com. Read reviews. Know the claim settlement ratio of the insurer. Talk to an advisor or an independent broker. Check exclusions. Don't skip the fine print. Don't over-insure. Buy only what you need. The best policy is not the most expensive. It's the most relevant. When something goes wrong, here's how you file a claim. Inform your insurer immediately. Fill out the claim form. Provide documents, bills, photos, proof of loss. An adjuster may visit you. After review, you either get full approval, partial approval, denial with reasons. Always document everything. Keep backups of all paperwork. Watch out for these red flags when buying insurance: agents who pressure you to buy immediately, policies with unrealistic returns, lack of official documentation, no mention of exclusions, high premiums without justifiable benefits. Be informed. Ask questions. Walk away if it doesn't feel right. Bonus: 5 insider tips to save on insurance. Tip 1. Bundle your home and car insurance to save 10 to 20%. Tip 2. Maintain a clean driving record. Tip 3. Opt for a higher deductible if you rarely claim. Tip 4. Quit smoking. Lower health and life premiums. Tip 5. Review your policies annually. Life changes, so should your coverage insurance isn't just about money. It's about peace of mind. It's about preparing for the unexpected. Whether it's protecting your car, your health, your home, or your loved ones, insurance gives you the confidence to live life fully without fear of financial ruin. If this video helped you understand insurance better, give it a like, comment below with your questions, and subscribe. Being Honest News for more real-world financial wisdom. Like this video, share your insurance experience in the comments. Subscribe Being Honest News for more financial insights. Remember, in the movie of life, insurance isn't the background. It's a powerful plot twist that can save your story.